All right. Hello again, everybody. This is Mike Rixey. I'm the lead options instructor for NetPicks. And in this video, I want to walk you through some of the key levels that are coming into play this week. We've had a very interesting start to the week. We'll take a look at some levels that we're watching closely for the next few days. We'll also take a look at our DOCU trade that we walked through in one of last week's videos. If you have not had a chance to watch those videos, highly recommend that you go back on the YouTube channel as we did post a number of live trades from last week. So let's go ahead and dive in. In last week's video, we had talked about how the expectation was for a market pullback. We had markets that have been very, very overbought. We started to see some signs of fear being priced back into the market. We saw volatility wake up a little bit last week, and that has continued into this week. If we take a look at the daily chart of SPY, the S&P 500, we did finally break through some of those moving averages that we had identified last week. That magenta line is the 8-period EMA. The green lines on my chart, those are the 20-period EMA and 20-period SMA. We have broken through those levels. It hasn't been just a washout move to the downside, but you can see over the past 3-4 days, we have had price below those moving averages. That opens the door for further downside pressure down to the 50-period SMA and EMA. Those are the yellow lines on my chart, right around 441. Would love to see those levels tested. If we get down to those levels, I would expect support being found there. I would expect a bounce initially. I would expect the bulls to step in there and defend that level. If those levels break, we could see things start to pick up steam on the downside. Right now, there's still an extreme level of complacency. No one is expecting a deep move to the downside. Everybody is just expecting the dip to be bought. If it does start to get nasty on the downside, the Fed will do something to step in and prevent any type of significant weakness. Tends to be the opinion of a lot of traders right now. I would love to see further downside just to clear the deck a bit. That way we don't have just this complete lopsided market where everybody is bullish, just chasing new highs. I want to see activity. I want to see movement back and forth. We have over the past week started to see the ATR down at the bottom. The average true range has gone from around 3.5 up to 4.2. We're starting to see much better activity intraday, a lot better price action to work with. We've seen volume start to uptick a bit, nothing extreme, but we have been, especially on these moves to the downside, between 70 and 100 million shares traded on SPY on a daily basis. That's great. For this time of year, we'll take it. It should only increase as we get further into the fall. If we take a look at the VIX, it briefly got above 18 today. It did close down right at 16. I would love to see the VIX upper teens, low 20s is the ideal range for us. That's when we typically see the best price action for our style of trading, which means I would still like to see another uptick in volatility. I am expecting over the next few days, I would expect further downside. We'll want to see if the dips continue to be bought. We do have a big CPI number out Thursday morning pre-market. That is the next read on inflation. We know the Fed watches that number closely. Over the past number of weeks, we have seen oil move higher. If you take a look at /CL, that is the oil futures contract, trading upwards of 83. We've seen oil move higher. We've seen a lot of the other commodities move higher. I want to see how that starts to play into some of these next inflation numbers that get released. We do expect, because of that release, I would expect some type of an opening gap Thursday morning. So just be cautious on any trades that you put on Wednesday. Just know that the potential is there for a large move at the open on Thursday morning. For us, we plan on being very cautious with new trades tomorrow. We would rather pick it back up, initiate new trades Thursday afternoon into Friday. That is our plan of attack here. Let's take a look at our DOCU trade. This is a trade that we talked through in the videos last week. And let me go ahead and pull it up here a second. So the DOCU trade, we went out to the September 1st options and we sold the 53.55 call spread. And I want to cover this because I've had a couple people ask, what is the plan on this one? Well, first of all, we have 24 days left to expiration. When you go out 24 days, at last week, we were closer to 30 days when we were taking a look at putting this trade on. The expectation is not for an overnight trade. Typical holding time for us on a traditional swing trade is anywhere from 2 to 20 days. We're still inside of that window. Don't be alarmed on a swing trade if a week passes and you just haven't made any type of significant progress down to target, that does not mean we immediately close out of the trade, move on to the next trade. We're going to continue to let this one work. The power of the reversal wave trader program is having a mix of trades. In the videos last week, we talked about our new active trader mode, where we're using the 60-minute chart to take very short-term trades, 1 to 3 days, very typical holding times there. But then we also use the 130-minute chart, and that is the traditional swing trade. Using a combination of both really gives us more consistency in our equity curve. It allows us to add in more layers of diversification. Well, when we opened this trade last week, we were looking to get filled around 63 cents is where the price was coming in at when we posted the video. It's now trading for 61 cents. It's sitting right at our entry point. So what do? Do we close it out? Do we just move on to the next trade? I don't do a single thing here. You have to remember that we have 5 ways of making money on this trade. We make money if the stock moves up, down, or sideways. As long as price stays below 53, we're okay. We also make money from time decay adding up and from volatility decreasing. Any combination of those 5 are going to help me. We really have not had the directional move in our favor yet. We haven't had any type of significant selling on DOCU. We have had some time decay add up in our favor. That's only going to increase. When you start to get under 20 days left to expiration, the time decay really starts to pick up steam. Those options are going to lose value just from time passing. That's helping us. If we get any type of a move to the downside directionally, that P&L is going to start to pick up in our favor pretty quickly. What do I do on a trade like this? I let it work. I'll come in, check it once or twice a day, and just let it do its thing. And then as we get closer to expiration, I'll manage it closely. You'll have to start watching it closer at that point just to make sure we don't need to make any adjustments or, to close it out early. We can talk about that in future videos. But for now, I'm going to continue to hold the trade as is, and we'll continue to see what happens over the next week or so. A couple other trades that I want to show over on the charts. This is, again, the 60-minute chart. This is our active trader mode here with RWT. I love this 60-minute chart. It is one of my favorite setup types right now because we continue to see some really nice swings back and forth in both directions. The last 2 days, it's a perfect example of why this 60-minute chart can do so well. If we take a look at the past 2 days, right, we have seen a move to the upside where the Dow was up 300 points. We had a session today where the Dow closed down 175. It was down over 300 at one point today. We're getting these moves back and forth. We're just not getting a lot of follow through for multiple days at a time. But these moves are big enough where that 60-minute chart can work really, really well. Let's take a look at the 60-minute chart. This is our active trader mode with RWT. It is quickly becoming one of my favorite ways of trading options. It allows us to identify the swings back and forth much quicker. The last 2 days, a prime example of why the 60-minute chart can do so well. We go back to yesterday, the market was up 300 points. You came in today, it was down 300 points. These are great ranges intraday. We're just not getting follow through into multiple days at a time. Well, the 60-minute chart is going to allow us to take advantage of these intraday swings that we get, and it allows us to hit target much quicker. We're not expecting these once-a-year type moves. These are very short-term swings that can add up very quickly with the use of the short-term weekly options. So here on SPY, we came in. You can take a look at our middle series of magenta colored dots. That's my entry point. My target is down below at the lower series of magenta dots. Stop up above at the upper series of magenta dots. When that setup came down, when it came down and touched the entry price, I'm coming in and we bought the 455 puts, $228 per contract. It gave me an aggressive bearish position. I was looking for a move to the downside. Thankfully, we got it. We're in this trade for about 2 days, just over 2 days. Came down, touched my target level, closed it out, booked a $257 profit, 113% return on that long put. Right? And if you take a look at the size of this setup, I've had some questions, asking, what if we don't get the big directional moves? Well, if we take a look at the size of the setup, I'm going to bring my data box over. If you take a look at the difference between my entry price and my target price in my data box, we were looking for a $4 move to the downside. SPY can move $4 in a matter of a few hours. You see these moves multiple times a week. It's not just a once every 6 month type move or once a year move. These are moves that we see on a very regular basis. A $4 move on SPY, Not anything out of the ordinary, and yet it's enough to produce 113% return in 2 days. That's powerful. That's why I love trading the active trader mode. Microsoft, very similar bearish setup, right? You can see my magenta dots, middle dots entry, lower dots target, upper dots was my stop. We came in, we bought the 330 puts, $435 a contract, came in, and in just over a day, we closed it out, $228 profit, 52% return. And again, this is a move on Microsoft where I'm looking for a $5 move to the downside. Very doable within a couple of days. These types of moves happen all the time. Does it mean we're going to win on every trade? No. We're going to have losses along the way as well. But when you start to see range pick up, I fully expect the rest of this year to be a very active year. I think it is prime for this style of trading. You really want to have access to a system that gives you entries, targets, stops in real time, gives you that roadmap to follow in real time. And I know a lot of you have asked, hey, how can I get access to the indicators? I've been putting out these videos now for the last week, and I've had a lot of people ask, hey, it looks great, I'd love to give it a shot. We are going to be hosting 2 webinars here tomorrow. I'm going to go ahead and include the link in the video description on the YouTube channel. But all it is netpicks.com/live RWT. You can go ahead, click on the yellow box there. We're doing these webinars at 12 o'clock and 7 o'clock Eastern time tomorrow. We're going to walk through all the details of the RWT program, especially the new active trader mode, how you can get access to the indicators, the training, the next round of setups. It's an ideal time. It really couldn't be any better timing wise with what we're seeing over the past week. This, in our opinion, is the start of a very active stretch. So we'd love to have you join us for the webinars here tomorrow. So again, netpicks.com/live RWT. Go ahead and go to that link. I'll put it in the description of the video on YouTube as well. And you can join us to hear about how you can gain access to the RWT program. So I'm going to wrap this video up here. If you have any questions at all on the DocuSign trade, feel free to reach out. You can post a comment on YouTube or email me directly, mike@netpicks.com. Otherwise, I'm going to wrap this video up here. Enjoy the rest of your day, guys, and we'll talk to you very soon with our next video.